if you've never run into this before, if you have a service-based business, like you're a consultant, let's say, you don't have a lot of assets, right? It's mostly cash in, cash out, and that's the end of it. But if you have a capital-intensive business where there's property or there's equipment or whatever, you spend $30,000 on a machine, you don't get to, or in the past, you didn't get to write off $30,000, even though you're out the cash, right? So you would have to depreciate it over the useful lifetime of that piece of equipment. And so if it was a 7-year piece of equipment, you divide 30,000 by 7 years, and each year you would take a chunk. But in the meantime, you're out the cash. In a sense, you are paying higher taxes today than you would have otherwise if you were able to expense that item. And that's very hard for people to get their minds around. So the thing that this does is it brings tax deductions in line with cash accounting, mostly. There are some special weird things that happen as you get into financing of equipment and things. And people who are doing that need to know what they're doing for sure. And you need to have good accounting to reconcile the differences between the actual basis, whatever liability you have on it, and cash payments and so forth. But fundamentally, what we're doing is we're saying, okay, you bought equipment, you bought a piece of machinery, you bought computers, you bought whatever, and then you are able to deduct them as in the same way that you are thinking about them as, oh, a new computer costs $1,500. I'm going to expense $1,500, and my taxable income is going to reduce by $1,500. Now, the great thing about this is that it's, if we go back to the subchapter A title, Permanent U.S. Business Tax Reform. Okay, so bonus depreciation is one of these things that has come in and out over the years. I remember I think it was 2011, we got 100% bonus depreciation just out of the blue. And it was just in response to the great financial crash. Congress was trying to incentivize more business activity. So it's just, here's 100% bonus depreciation. And then it went away in the next year. And then Tax Cut and Jobs Act comes along in 2020 or 2017, and then we get 100% bonus depreciation again. But then it had this step down. It went from 100 to 80 to 60 to 40. So, this transientness makes it much harder to do business in a regular kind of way. But by making this permanent, that gets rid of that, at least until Congress passes another tax bill. And if you've been around for a while, you'll notice we get one of these every 10 years or so. So for the next decade, we're probably in this regime where we have permanent, or as permanent as anything is with Congress, bonus depreciation of 100%, which is good, in my opinion, because again, most people are on a cash basis. There are times when accrual, where you book the income and you book the expenses for future agreements into today when you make those agreements rather than as the cash comes in. There are times where that makes sense. And generally, those are going to be for larger, more complicated businesses. For small business, which is the people that I talk to by and large, that is not in the purview, right? So we're in cash accounting, and now our assets are going to be in cash accounting. I'm all in favor of this particular change. I think it could have come a lot earlier. From the beginning would have been great, but it is what it is. And we are stuck with whatever Congress actually does. So that is Section 70301, full expensing for certain business property. And it's basically everything less than residential real estate is how it shakes out.